In the modern world, we were conditioned to believe a dangerous lie, that to achieve results, you must constantly act, work harder, move faster, click buttons, make decisions. From the moment we enter the corporate world or build our own businesses, society rewards execution. If you are not doing something, you are perceived as lazy. If your business is stagnant, you are failing. In the real world, that rule builds empires. But the moment you step into the financial markets, that exact conditioning becomes your psychological trap. It is the single highest barrier between an experienced professional and consistent profitability. In trading, activity does not correlate with profit. In fact, most of the time, action is nothing more than a direct path to a blown account. The market does not reward manual labor. It rewards disciplined patience. The psychology of boredom trades. When a mature, successful individual enters the market, someone who has built a business, managed teams, or conquered a high-level career, they bring their life experience with them. They are used to being the smartest person in the room. They are used to making things happen through sheer force of will. But your brain is wired for problem solving. It tells you, I cannot just sit here for 4 hours doing nothing. My capital is stagnant. I am wasting time. I must control the outcome. And that is exactly when the trap snaps shut. The market goes quiet. The high-volume morning session ends. Volume drops. Price begins to crawl sideways in a tight, meaningless range. There is absolutely no high probability setup on your screen. Your edge does not exist in these conditions. But your finger is already resting on the mouse. You feel an itch. You start zooming into lower time frames, looking for patterns that aren't there. And this is where the internal conversation begins. The trader starts negotiating with himself. Maybe this level is enough. Maybe I don't need full confirmation this time. Maybe the market is about to explode and I will miss the move. The dangerous part is that none of this feels emotional in the moment. It feels analytical, logical, productive. The trader still believes he is thinking professionally. But deep down, the real problem is much simpler. His brain can no longer tolerate inactivity. That is why boredom becomes so dangerous in trading. Boredom creates emotional pressure, and emotional pressure slowly destroys objectivity. The trader starts needing movement simply to feel mentally engaged again. And once that emotional need appears, patience starts collapsing very quickly. This is the birth of the boredom trade. You are not executing a high-probability strategy. You are not following a back-tested plan. You are opening a position simply because your brain cannot handle the weight of empty time. You trade because you want to feel alive. You trade to cure your boredom, and the market gladly charges you an incredibly high price for that entertainment. Most traders do not realize how deeply modern life contributes to this problem. Outside the market, people are constantly overstimulated. Notifications, emails, videos, music, social media. The brain becomes conditioned to permanent stimulation and constant activity. Then suddenly trading forces you into silence, and silence feels uncomfortable. A professional trader may sit in front of the screen for 2 hours and execute absolutely nothing. To most people, that feels emotionally unbearable. They begin questioning themselves. They begin questioning the system. They begin searching for action simply to remove the discomfort of waiting. But experienced traders eventually understand something extremely important. The market does not reward your need for stimulation. It only rewards disciplined execution. And sometimes disciplined execution means doing absolutely nothing while everyone else around you is emotionally forcing trades. Action versus reality. Let's look at the math of reality. Amateurs measure their performance by how many hours they spend watching the tickers and how many orders they execute. They think more volume equals more mastery. They want to feel like a Wall Street trader from the movies. Cluttered screens, heavy breathing, non-stop movement. But look at the screen. Trader A executes 50 trades a week. He endures sleepless nights, spikes his cortisol levels, glues his eyes to the charts until 2 a.m., argues with his spouse because he's emotionally drained, and after paying heavy commissions to his broker, he nets a 2% return. Now look at Trader B. He waits. He drinks his coffee, reads, handles his primary business, and waits for the exact hour where the market structure perfectly aligns with his ironclad rules. He executes 5 trades. No stress, no chasing. He nets the exact same 2% return. The market does not pay you for your manual labor. It doesn't care how hard you sweat or how many hours your chair squeaks. It pays you for your discipline to endure the boredom of waiting for an edge. If your strategy tells you to wait 3 days before taking a single order, sitting on your hands and doing absolutely nothing for those 72 hours is your highest paying job. In the professional world, doing nothing is often the most profitable trade you will make all week. Let's look at what the 50 trades a week runner doesn't show you on social media. The brutal mathematics of friction. If you have run a business in the corporate world, you understand overhead costs, operational drag, and thinning margins. In trading, your overhead isn't rent or electricity. It is commissions, spreads, and slippage. When you execute 50 trades a week, you aren't just fighting the market structure. You are actively feeding your broker's bottom line. Every micro decision carries a premium. Even if that restless trader manages to net that same 2% return at the end of the week, they likely had to generate 6 or 7% in gross profits just to cover the cost of their own anxiety. They are running a high turnover, low efficiency engine. Trader B, by doing absolutely nothing 95% of the time, operates with virtually zero overhead. He keeps his capital clean, his mind sharp, and his execution pristine. He lets the amateur absorb the cost of friction, while he extracts pure margin from the market's true imbalances. The value of a $0 decision. Amateurs operate under the delusion that a trading day is completely wasted if they did not execute an order. To them, an empty terminal means an unproductive life. But to the seasoned professional, an empty trading day is celebrated as a highly successful operation of capital preservation. Imagine opening your charts at the start of the London or New York session. The news feeds are chaotic. The charts are moving erratically with volatile spikes, but your highly specific mechanical setup is nowhere to be found. The market is screaming for attention, but it is refusing to offer an edge. At this exact moment, the amateur experiences an existential crisis. He feels an overwhelming internal pressure to do something to justify sitting at his desk, to prove that he is a trader. He forces an entry. The professional, however, assesses the data, recognizes the lack of structure, and closes the laptop by 9:30 a.m. He spent exactly 30 minutes to make a $0 decision. In any other traditional profession, walking away from your workstation feels completely counterintuitive. In this elite arena, walking away when your edge is absent is the ultimate expression of professional control. You did not lose capital. You protected your ammunition for the battlefield that matters, designed to keep you active. To truly master the art of doing nothing, you must understand something important about the modern trading environment. Nearly everything around you encourages activity. Trading applications constantly send notifications. Financial media constantly creates urgency. Social media feeds are filled with traders posting winning screenshots, dramatic predictions, and emotional reactions to every market movement. The message is always the same. Something important is happening right now, and over time, that constant stimulation changes behavior. The trader begins feeling pressure to always stay involved, to always monitor the market, to always react quickly before the opportunity disappears. Patience slowly starts feeling unproductive, even when the market conditions are completely unclear. This creates a dangerous emotional cycle. The more information you consume, the harder it becomes to remain calm. The harder it becomes to remain calm, the more likely you are to force unnecessary trades simply to relieve emotional tension. And this is why many traders lose objectivity after staring at charts for too long. At first they are patient, then they become restless, then emotional urgency appears, and finally, discipline quietly disappears. Professional traders understand this very well. That is why many experienced traders intentionally reduce noise. Fewer alerts, fewer opinions, cleaner charts, less unnecessary information. They understand that protecting mental clarity is part of professional risk management. Every time you refuse to take a low-quality setup, you are still making a professional decision. You are protecting your capital, protecting your discipline, and protecting your emotional stability for the opportunities that truly matter. Professional trading often means becoming comfortable with inactivity while waiting for quality opportunities, guarding the mind against the noise. So, how do we practically implement this? How do we build a mind that thrives in stillness? First, you must lock the media noise inside a cage. The financial news network, the social media tipsters, the urgent telegram alerts. Their entire business model relies on making you panic. They sell volatility. They sell urgency. They create the illusion that if you aren't positioning yourself right now, you are missing the opportunity of a lifetime. If you let their urgency enter your mind, you will break your rules before the market even opens. Your strategy plan is the padlock. If a piece of information does not alter your long-term mathematical edge, it belongs inside the cage, completely muted. You do not need to know what a pundit thinks about the market. You only need to know what your plan dictates. Professional traders look incredibly boring from the outside. They don't shout down phones, they don't sweat through their shirts, and they don't chase candles. They have developed a high tolerance for missing out on mediocre moves. They understand a profound truth that guards their wealth. A missed trade costs you exactly $0. A forced trade born out of boredom can cost you your entire financial freedom. Why is sitting still in complete silence so profoundly painful for a high-achieving individual? Because the art of doing nothing requires you to actively dismantle your own ego. If you have spent decades becoming highly intelligent, building wealth, or managing complex business operations, your mind is conditioned to believe that you can predict, manipulate, and control outcomes. You want to be right. You want the chart to validate your analysis so you can feel the validation of your intelligence. But the financial market has no ears, no empathy, and it feels absolutely no respect for your past achievements. It is a massive, cold, discounting mechanism. Doing nothing means accepting a humbling truth, that right now, you have no statistical advantage. It means watching a massive green candle shoot upward without you and refusing to feel the toxic sting of the fear of missing out. You must become comfortable with letting the market move without your permission. The day you stop trying to conquer and predict the market is the exact day you finally begin to systematically harvest it. Practical protocol for the professional. To ensure you don't fall back into the trap of mindless activity, you must implement a protocol for your downtime. Step 1. Define your boundary. Give yourself a strict time window. If your setup does not occur within the first 90 minutes of the session, close the software. The longer you sit staring at an empty chart, the more your brain will hallucinate a setup just to justify your time. Step 2. Step away from the glass. When the market is consolidating, stand up. Leave the room. Go manage your business. Go walk. Read a book. Disconnect your eyes from the moving pixels. And step 3. Start tracking your non-trades in your journal. Write down the dates where you successfully sat on your hands and refused to take a garbage setup. Treat those days as massive psychological wins. When you start taking pride in your ability to do nothing, your equity curve will reflect your maturity. The ultimate choice. True wealth in trading isn't just about the compounding numbers in your broker account. It is about the preservation of your time, your health, your focus, and your ultimate peace of mind. You can choose to remain trapped in constant noise, chasing activity simply to feel productive, or you can master the elite discipline of silence. I made my choice to do less and achieve more. What about you? If you enjoyed this video, please like and subscribe to The Patient Trader.